Good evening, everybody. This is Johnny Seville. This is your executive summary for stock setups for the 22nd, Wednesday, the day before D-Day. Of course, D-Day being the vote on the Brexit over in the UK. This is the first time I've ever had that I can remember having a bulletin flash in front of me when I logged into my brokerage account this evening, straight from Interactive Brokers, saying, "Warning, warning, the referendum is coming, and we expect massive amounts of volatility, extreme volatility, and to be warned, please review your entire portfolio. We strongly urge you to, especially if you're in leverage positions and options." So let that be the warning sign when your own broker is warning you against trading or holding stocks anyway, that we can be in store for some turbulent times. So what could that mean? Well, we could obviously have funds, obviously liquidating long positions. We could have lots of investors liquidating short positions, and we can have lots of little greedy traders and high frequency people getting in and out, trading that volatility the whole way through. So we are going to be set for some extremely interesting couple of days or few days ahead. It's going to be amazing to watch. Day traders out there could be in some incredible action if you can get in and out on those rapid movements. Now, for swing traders and for a lot of swing traders that are just easing in and out of the market, looking for some nice, safe, secure, reliable moves, this may not be the market for you, but that's for you to decide. But obviously, the market is on high alert. We have basically by the end of Thursday's trading, we'll know where things stand, and so if you're looking to get out of the market and go to secure grounds, there's kind of tomorrow and Thursday morning to do that. And for those of you wanting to play the wild rapids of the East, then this is basically the time for you. Now, looking at the S&P 500, we can see that there is no real clear pattern at the moment. We are in again, turbulent times. It looks like we are, again, we've either got this kind of head and shoulders type of action, or we could also look at this as being a possible upward channel. Both of those would be bearish. However, we've got the upward bias of the open range to the upside, which means we could also push all the way still up to the 21.25 while still remaining in that upward channel. So both of those would be bearish patterns, but we still have more room in the upward channel scenario versus possibly in that head and shoulder scenario. So we've got a lot of kind of mixed signals going throughout the S&P 500. All we've got to go on in terms of direction is that open range is still leading us upwards. Now, if we have a look at the FTSE to give a reflection of what's going on in London, this is kind of a more telling sign. If we look at this, we have a much more kind of clear pattern in my eyes. We seem to have an expanding range downward channel. Now, an expanding range downward channel is bearish. A downward channel with parallel lines is bullish. So basically, we've got these two similar patterns, but in fact very different. One says that the selling is getting more and more excited. One's saying that the selling, basically we have controlled consolidation, which is then an upward break. This means more downward movement. Now, what's interesting is if we have a look at the volume over these last 3 days, we'll have a look at Friday, June 17th, 1.27 billion, as the FTSE went up 1.19%. We then have Monday, June 20th, up 3.04%, volume 979 million. And then, but up 3%, so we had almost 3 times the move, but on 30% less volume. And then we had another move up of 0.36% with the candle consolidating only on 816 volume. So we've kind of had this weird action where all the volume was at the start. Volume's been dropping, even with this big candle on very light volume, and then basically coming into crunch as we get into the resistance area there. So really interesting stuff happening as well in the FTSE. So what does this mean? Again, I mean, this is the time where, if you're wanting to play some of the volatility, great. Do it with high caution. The way we treat this event is much like we treat holding a stock into earnings. Now, if we get into a stock that is about to report earnings, we will generally not hold a stock position into earnings announcement. Because let's say that we've had $10,000 in that stock and our stop loss is at 2%. Well, I mean, unless there's a huge gap down, we should be able to control our risk and get out at a 2% loss or close to it. But the one risk, of course, is a gap down. What if the stock value jumps over that stop loss and goes from, say, a $10,000 position, gaps down 50% to a $5,000 position? Nothing you can do about that. So that's, of course, why we avoid news announcements in when we're holding stocks coming up to those types of events. Now, if we were to trade an earnings announcement, the way we do that is we use options. So we say, okay, we may we may buy puts in an option puts in a stock that is announcing, say, tonight. Because we know that worst case scenario, if we're buying puts, all we can lose is the money we put in. We don't lose half of our stock position, for example. So same example, if we were to be buying, if we said we'd normally put $10,000 into a stock and we were willing to risk $200, that would be our stop loss. Well, then we might go to a high risk option where we're expecting potentially a massive move to the downside, but we wouldn't go put $10,000 into that put. We might put 200 or 400, right? So let's say that we lose 50% of that position overnight. We're only losing what we would normally lose in a stock trade. Or if it was a super high risk, where basically, which earnings announcements really are, then we may be losing all overnight of the position we put in. So when we're dealing with high risk options or potentially explosive moves that could be in either direction, either very much so in our favor where we could make 1,000% return, or completely against us, at least if it goes against us, we're only losing a limited amount for a potential unlimited upside. Now, so going into this type of a market situation, just consider, what are you willing to risk? I'll certainly be looking to play some puts in some carefully selected stocks. I may also look at playing some intraday longs. But what I'll be very cautious of is that I'm only investing what I'm willing to lose in this market going forward. So obviously consider what's right for your risk profile. We're not here to advise, but simply just wanted to point out the dangers and potentially opportunities of the volatility ahead. Of course, for those of you who are full gold subscribers, we will be doing a special preview of the volatility ahead tomorrow night in tomorrow night's summary. So if you are not a gold subscriber, make sure you do take advantage of our $9 trial offer at the end of this video, because this could be a couple of days that could make or break your year. And for $9, it's not worth missing. We've been dead on pretty much with this market over the last few months, and this could be the where we really put the gas on and could be a catalyst of where the market goes for the next few months. So don't miss out. The link to enroll will be towards the end. Now, talking about playing options, of course, our alert today, our text alert, was that we were going to be buying $97.50 July puts on earnings. The reason being here was that we had a head and shoulders pattern on Adobe, left shoulder, head. We were at the top of the right shoulder. There was massive insider selling on Adobe. It's also in one of the weakest industry groups in the market, which is application software, and everything just lined up at resistance. Industry selling, insider selling, the high probability pattern of the head and shoulders, and even though it looked bullish here, that the rules told us to short. Now, after market, that has had a lovely drop. Last time I looked, yeah, so down at 94.98, which, hey, guess what, is right down underneath that neckline. So I'm going to be looking very carefully in the morning to take profits immediately on any sign of a reversal. So I'll be looking to where it opens. If the market opens bearishly, I mean, best case scenario, I'll be looking to get out around 92, but otherwise looking to start liquidating around 95, or again, any signs of upward reversal in the stock. Now, so that's a beautiful play that should work out really, really well. Of course, looking at some of the other plays again, Bungie still looking really good. Bungie just holding under resistance. One of our existing alerts. UNP also. One of our existing alerts, kind of right up in that top end of the Head and Shoulders channel there on Union Pacific Corp. So both of those still were kind of top of my favorite list of ones that have not yet really played out yet. Let's have a look. We've got we got IMAX as a possible as a bear flag, which we discussed in Trading Room tonight. Again, that was one from last night, last night's scan, so it's kind of already dropped. But I mean, if we could get a rally back up to just under 29.50, let's say 29.43, this could be a potential trade if it rallies back up, and then I'd be looking for a drop down to. Let's have a look here where that support zone comes in. So you can see that support at 26. So I'd be going just above that. I'd be looking at a target of 27.13 there. Okay. Now, we also have LL. I still think this looks like a good flag formation if it's able to break that downtrend line here. So if it breaks through that level, we want to see this 610. 606 may still be okay as a breakout entry, but I look for a break of, say, maybe 610 above that, so 611, 613 as the breakout trade. Now, for those who like, that's the more conservative way to play the flag, but as I pointed out in Trading Room tonight, there's the more aggressive way to play the trade is to be buying inside the oscillation. So, of course, we're at 1546, so any kind of pullback down towards this bottom end support, which would be around 1517 or possibly even down at 1490, that would be buying inside the flag before the breakout. So that is the higher risk because the flag hasn't yet confirmed, but the way some people do look to trade it, in that case. Your stop loss criteria would need to be below, well, the way our strategy would dictate it, it would need to be below this bottom trend line. So there's another thing to watch for in terms of a potentially aggressive play tomorrow to the long side. Looking at one of the most interesting plays I found today was looking at SGY, also a potential flag built within a few different kind of patterns. Let's zoom in and take a look. Okay, so let's go to just a chart without indicators. And if we look at where this chart has acted, you might not see anything that immediately pops out. But let's zoom into what this pattern is down here on the right. What we have here is we have an ascending triangle formation. So we have equal highs and higher lows, which is an oscillating pattern which dictates that if we measure the start of this triangle and then duplicate it, that is where that breakout point should go to. So the longer term target on this is a move all the way up to about $11.30. So this is what the swing trading pattern dictates. So an SGY, one trade as a swing trade would be looking for a pullback to 753. Okay. Yeah, look, pull back to 753. My target 1 would be 920. My target 2 would be 1061. And my stop would be 657. Now, that's as a swing trade. Now, the other trade, however, which I feel is just as valid, and I would also program in, is one that could trigger, is that this stock doesn't even pull back to that support, and And in fact, the intraday chart is what plays out. So what do I mean by that? Well, if it doesn't pull back to support on here, when we zoomed in tonight to analyze this trade, we found something quite interesting. Okay, we're just going to show you here what kind of, let's go to our 5-minute chart. Okay, so going to a 5-minute chart, which shows us this entire rally that's basically taken place, what you can see is that we've actually been running up on a series of flags itself. So we actually had, there we go, let's go to the 5-minute actually. It's a bit more clearly drawn out. Okay, so there we go. We've seen this big shot up, and we had a flag formation here, big break. Then we measure the breakout point to the top of the flag. And we get breakout point to the top of the flag. So flagpole, consolidation down, another flag, flagpole up, consolidation down. And now we're looking at another flag again. So there's flagpole 1, upward flag, flagpole 2, and look at these exact measurements, just beautiful. From straight there, straight up. Exact same measurement, straight there, straight up. Right over here, from straight there, straight up. So what this gives us is a possible target of $9, actually right there, $9.29 is where that target then takes us up to, $9.29, okay? Now if I go back to the normal charts, and I think we're looking at this as a possible flag run to 929. Let's go back to the daily chart with all that noise removed. And let's use the Fibonacci extension to see what the daily chart's Fibonacci's would tell us. Okay, I'm not sure what's going on with the chart there. Just refresh this. Okay, so what we're going to do is now we're going to go for a Fibonacci extension from the bottom to where that breakout occurred. We're going to use a Fibonacci extension. And remember those figures we talked about. Let's now zoom in and look at exactly where that 38.2 Fibonacci is, 929. So the Fibonacci extension of this pattern also predicts a 929 target on that flag. The Fibonacci extension also comes into play right there at that 77.7 mark, which is where the extension of the swing trading pattern is. So both trades actually look very interesting. This stock could easily reach the 929 area, and if it keeps powering through, can actually get all the way up to the 77.7% at $11. So this is kind of some very interesting stuff. So now if this is something that you felt the market was going to go higher and you wanted to play that volatility, this is the kind of thing if I was going to hold in through the period where I'd go and throw a few $100 into some call options. You know, some $8, $9 type of call options. That we can limit our risk by only what we put into the position, but we risk losing it all if the market just completely tanks. The other way to look at it is just simply a short-term trade before the volatility really starts to get crazy, and we're looking at a target at 920, just below 929, and a possible secondary target if things really shoot up to around that $11 mark. So it's either way you basically look at it, you're going to be trying to avoid the unforeseen consequences. Now, having a look at the option chain, there really isn't much there, so it really would be purely a stock play. So I'd be looking to kind of capture some profit in, and if I wanted to leave some fun money in there for a higher target, obviously doing that knowing the risk of the potential volatility. But that is the play, and if we get big volatility tomorrow and early Thursday, you never know, this could be up at those levels. But certainly I think that 929 target it was within reach. Now, this is the swing trade type of approach. So let's go back again to the to the default chart, just because I have my indicators set up and configured a bit differently. And we're going to go back to that 5-minute chart and talk about how we would approach the secondary potential trade. So the secondary potential trade is looking at this intraday movement versus the swing trade chart. And here we can see big rally, consolidation, and even though we're looking at predicting this kind of second flag, right up to this level, there's that 929 target. Okay. What you might actually even be able to see down the bottom is another little flag here. Look at that. Flag. And then moving again. So even within this big flag, we've got other smaller flags. So it's quite amazing, really. So with this second potential trade, I would be looking for a... let's have a quick look here. Yeah, I'd be looking for a pullback kind of to the 814 level or a break above 833. That's what I'd be looking at for here. I mean, if you're watching it during the day intraday, you may get lucky. It may even pull back even further. And with that, I would be looking at a target of 9. I said 903 earlier tonight, but I think we can probably push higher. I think we could probably look at 913. And for this, I'd have a stop loss at 773. So we're basically giving it enough room to move. I'd be watching it closely in the morning to see how low it could get before I pulled the trigger. Again, these are very volatile markets. But if I had to preset, I'd say, again, 803 as a pullback, or a break of 833 as two possible entry criterias. But watching it in the morning, you may end up finding you can even get it pulling back to some of these lower levels around 795. So it could be a something with a little bit of work to it. But if I had to preset it, those are where I preset it at. But I will be watching this in the morning as I exit my Adobe puts, which should hopefully be a nice 200, possibly 300% gain. And which is overnight, so that's not bad at all. But yes, those would be the key trades that I would be looking at going into the market. Now I have a list of some excellent longs and shorts that I've been building over the last 3 weeks. So we are ready and rearing for some of the highest probability moves based on where this market goes following the vote. So again, don't miss the opportunity to give us a trial if you're not a fully fledged member. It's only $9 for a full month, so you'll be able to capture all of our alerts like this every night in video format, as well as our live trading rooms on Tuesday and Thursday at 4 p.m. Pacific, 7 p.m. Eastern US time. And to do that, simply go to acornwealthcorp.com/gold. You will not be disappointed. I look forward to seeing you all in our executive summary review of what's to come on Thursday as we hit tomorrow night. And then, of course, Thursday night's trading room will be an epic show, if nothing else. So we'll see you all there. Have a wonderful night. Take care.